Hey guys, welcome back to the channel. In today's video, I'm going to be providing a long-term outlook on Bitcoin through the lens of the logarithmic regression curves. And this is an indicator that I created using all of Bitcoin's price history, and more specifically, I took the weekly closing price for Bitcoin for as far back as this chart goes, and then I created a best fit curve that goes through the middle of all this price history. And that best fit curve is the middle one right here, the bright green, which is sort of the center of this indicator with each regression curve above and below, so that we can get a range of values that fit Bitcoin's entire price history. And then I have also color coded it based on how low or how high within the regression curve Bitcoin is. And of course, that gives us the idea and the comparison to previous market cycles, where you can see how historically we have seen towards these warmer, brighter colors up to the top being sort of the peak and when we have the most risk, and then towards the cooler, bluer colors, that is of course when it is more of an accumulation zone more than anything else. And what's interesting with Bitcoin with these regression curves is that over the history of Bitcoin, we've seen that it has basically diminished the distance from these extremes, where it's no longer really revisiting the lower and the upper regression curve, and we're sort of just consolidating within the middle, generally getting close to that middle curve, the bright green one. And once again, and I think this makes sense because over time we know the volatility will diminish as Bitcoin does grow and get more adoption, as it increases as sort of that store of value and global asset class. We do know that it's going to get less volatile, especially with the market cap increasing with cycle over cycle. So I think that's a very important point to consider when looking at this, because for example, back here in the 2015 bear market, Bitcoin made it all the way down to the very lower regression curve, and that was where it sort of had this accumulation period where these two curves served as a great zone for Bitcoin to just accumulate and build up into the next cycle. Whereas if we were to compare that to today, the lower regression curve right here is at $12,000, and then that second blue one right here around $19,400. I think that's a fairly unreasonable range to expect Bitcoin to accumulate for several years, similar to how we did in 2015, because we know the volatility has been diminishing. We've seen that on both the upside and the downside. Especially with the upside, you can see that Bitcoin on this first peak actually went outside of the regression curves, briefly revisiting the orange curve right here in 2017. And then in the most recent all-time high back here in 2021, we didn't really see a move above the orange one. In fact, we just had this move sort of having a distribution phase within the yellow and the orange. So it obviously has been, from cycle over cycle, diminishing how far Bitcoin has gone up the regression curves. And the same thing is really playing out here on the downside, where in the 2015 bear market, Bitcoin had a move coming all the way down to the lowest regression curve, briefly below it on the daily candles, but not on the weekly time frame. And then in the 2018 bear market, we had a move coming back down to the second lowest regression curve in light blue. And we basically had multiple months just consolidating right at that, and then one last retest right here in March of 2020. That is more or less where we found a bottom off of, at least in the short term, during this market cycle. So we haven't seen a move higher than the previous band, but it does happen well above the move from back here in 2015. So I would still make the argument that we are seeing that diminishing volatility to the downside, especially considering that we didn't make it up as far this time around. So if Bitcoin were, for example, to have made it all the way back up to, say, above the orange, then on this move to the downside, that would have brought us much higher. But because we didn't really see a blow off top, that's sort of taken us back down to the same valuation, same regression curves that we saw back here in the 2018 bear market. Now, that being said, this definitely does seem like a logical level to expect some sort of big 4-year cycle low, just given that we have seen a move fully retracing all of that bull market, coming all the way back down once again to these lower regression curves. And in general, we are starting to see some of those bottoming signs on the short-term time frames. And I especially think that we are in a similar accumulation phase to this move that we saw back here in 2015, where basically we just kind of rode through two regression curves all the way up into the base. And then eventually we did have that move breaking out, forming the new cycle peak. Similar to here to in 2018 and 2019, where we had more or less two bands act as our support and resistance, as we had quite the period of consolidation here. We did have a brief move back above right here in the 2019 peak and rally up around 4x off the lows, but in general, we did come back down to retest and go back and enter within these two ranges. So I do think that we are at a similar phase right here, and just zooming out ahead of us, we could potentially expect these two levels to be more or less our accumulation into, say, a future bull run. Now, of course, I do present this as a guide more than anything else, and it is important to understand that we could see very brief moves outside like we did right here in 2019. In fact, we had a pretty significant rally up around 2 more regression bands, but later we just entered back within it and continued to have more or less a range. So for example, we could expect volatility both to the upside and to the downside, where maybe we do have a move coming back down below it, maybe even forming a deeper low. But in general, I do think that we will spend the majority of our time in this accumulation phase between these two bands. Even a move to the upside could be expected, but ultimately we're going to see something more or less resembling the previous two accumulation phases if we are to have a similar cycle as the previous two. Of course, that doesn't have to happen, and there's no guarantees that previous price history is going to give us a future prediction, but this would be my best guess because I do like to stick with the longer term trend. I do like to stick with the very cyclical nature of Bitcoin because it has been quite predictable over the years, again going through pretty similar periods of decline over around a 1-year bear market and then a 3-year period of rising. So if we are to see something similar in the next market cycle, that's what I would expect. I would expect generally consolidating within this 2-band range, and maybe some brief fake outs either to the upside or to the downside like we saw right here in the last cycle. But in general, this would be my best guess at where we could accumulate. And then eventually when we are ready to have sort of that next blow off top, we could look to maybe a regression curve or two lower than the previous all-time high. So that could be towards this lime green and light yellow. So we could look to those as our potential all-time highs in a future bull run. Of course, much further out from here, and we do have a long ways to go before those are even relevant, but I did want to throw that out there as where I stand on this longer term outlook with the regression curves. I hope you guys enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I will leave a link to that in the description below. I'm fairly active over there with crypto content. As always, hope you guys enjoyed, and I will see you in the next one.